Hello traders, this is Dion. Welcome to my channel. Today I want to talk about order blocks and fair value gaps. Where are you supposed to take a trade? Where are you supposed to enter that trade? So before we talk about the two, let me just say something about a point of interest. Okay, so a point of interest on a chart is an area. Okay, point of interest is an area on a chart or a level where a trader anticipates a potential trade entry. Okay, this is an area where you're looking to enter a trade. That's a point of interest. It's basically an area where you are ready to take a trade. Okay, there is a high probability that the price will reverse from that point. So the two most used and most obvious points of interest in trading, it's these two. Okay, order block and fair value gap. So between the two, where are you supposed to take a trade from? Oh, I hope this video helps you remove that confusion. Okay, so let's start with the order block. Now if you know how to draw a valid order block, not just any other order block, you know that it comes with a fair value gap. And order blocks always comes with a fair value gap. Okay, a fair value gap is just an indication that the order block has not been mitigated. Okay, you can see this order block right here. There's no candle that has touched this order block, okay, because of the fair value gap. Okay, and we are looking for an order block that hasn't been mitigated. So of course there's supposed to be a space. Okay, okay. So if you are if you are trying to choose between the two, this all just comes down to preference. Believe it or not. Okay. So I'll give you two types of traders. Okay, then you can pick which category you fall into. Okay, so there's aggressive traders and there's conservative traders. Okay, aggressive traders tend to be a little bit uh, more impatient. They are basically impatient. Okay, and conservative traders are patient. Okay, I'm the impatient kind. Yeah. Most entries that I enter are aggressive. That's why I trade the 15-minute time frame and only enter on the 1 minute time frame. Yeah. So one thing you have to know, if you're an aggressive trader, you draw your point of interest on the order block. Okay. But start looking for potential trade entries in the fair value gap. As the market is approaching the fair value gap, that's where you start looking for potential trade entries. Okay. Now, you this I hope this helps. You can think of the order block as a magnet, okay, and the fair value gap is like the magnetic force coming from this order block. Okay, the price may not necessarily hit the block but still react to the magnetic force. Okay, and actually reverses from the same magnetic force. Okay, it didn't actually hit the magnet, but it just reacted to the force right here. Okay, and then bounced to the downside. Okay, now the advantages of this is that you get in the trade early. If the market only reacts to the fair value gap and reverses, you won't miss that trade. That's the advantage. Okay, but the disadvantage here is that the probability of the trade going your way, the probability of the trade going your way is low. Okay, if you enter a trade in the fair value gap, the probability of the trade actually going your way is low compared to the trades that you would have taken in the order block. Okay, even the risk is when you're entering in the fair value gap, especially if you don't know trade management, the risk tends to be a bit bigger compared to the trades that you are going to end to take in the order block. Okay, so the thing is, the price can actually give a short-term reaction to this fair value gap. Okay, like the price can go all the way into the order block, actually goes back and then retraces like 50% of this movement and then goes back, okay, to the order block, reacts to the order block, and then goes to the downside. Okay, the market does that. So that's one disadvantage. That's actually the main disadvantage. Okay, but if you are a patient trader, okay, the conservative trader, which I actually recommend, especially if you are just getting a hang of, SMC, or you just started learning trading, I advise you take the conservative approach. It will help you avoid a lot of headaches and money actually. So yeah, in the conservative approach, you wait for the market to hit your order block for a potential trade entry. You wait for the market to hit the order block. Yeah, advantage of this is that the probability of the trade, like I said uh, in the beginning, the probability of the trade going your way is actually high compared to taking a trade in the fair value gap, and you actually risk less here. You can see that the price has this is especially if you are in the extreme order block. This is like the last point here. Okay, so you can compare this the distance from here to there and the distance from here to there. Okay, you actually risk less. Yeah, even if you're actually looking for trade setups under the lower time frames. Okay, it's actually the same. So now, the disadvantage of the conservative approach is that you miss more trades compared to taking trades in the fair value gap. What happens is that, like I said, the market can actually just react to the fair value gap and then rush to the downside and create a break of structure without actually, let's say you are trading a 4 hour time frame and then you've been waiting for days, and then the price just reacts to the fair value gap and then rushes to the downside. You have missed that trade. Okay. Now, this is where I advise people not to change their strategies, okay? I'll say this again. You only lose money if you actually entered that trade. Okay? That's when you lose money. You only lose money if you actually entered that trade. Okay? If you didn't enter a trade, you just missed the trade. You didn't lose any money. Okay? So, in both conservative approach and the aggressive approach, you draw your point of interest on the order block. Okay, you don't just draw your point of interest in the conservative one, but you even in the aggressive one, you draw your point of interest on the order block. Okay, the only difference is where you start looking for a potential trade entry. In conservative, you start looking for a potential trade entry in the order block. In the aggressive one, the aggressive approach, you start looking for it in the fair value gap. But even if it goes your way, okay, so this here's the thing. Not all trades under aggressive are taken in the fair value gap. Okay, sometimes you won't see a sell. This is a downtrend, so you sometimes you won't even see a sell setup in the fair value gap. Okay, it won't form until the price actually reaches to the order block. Okay, so yeah, you you actually take a good trade still, even if you are an aggressive trader. Yeah, so it all comes down to who you are and what you're comfortable with. But if I were to give an advice right now, I think if you know you are not yet profitable and you've been losing money left, right, and center, take the conservative approach. It gives you more room to think objectively. Okay, you remove most of the emotions. Yeah. Okay, but if you think you're already, a seasoned trader who was only missing maybe one or two touches to perfect your entries, you can try the aggressive approach. But if you are not careful, that's a warning. Okay, if you are not careful and you don't know anything about trade management, the aggressive approach can actually turn into gambling very quick. And trust me, my friend, you don't want to be there. You really don't want to be there. All right, guys. I hope this actually helped someone out there. This has been Dion Trades. See you in the next video.